we're still incredibly early in crypto. And, people like to often compare it to and draw parallels to something that they understand, something that they lived through, like the dot-com boom in the 90s. If we're comparing it to that, I think it's like 95, 96. There's a huge amount of runway left. If you're investing in individual tokens as we do, the equivalent of a stock picker in this sector, it's an incredible time to put money to work. I mean, the amount of innovation, the amount of fundamental innovation within crypto is quite staggering. I mean, some of these teams are literally inventing new fields of math to, push cryptography forward. As I said, a lot of the hot money has vanished. I think the kind of new wallets, the new amount of investors coming into the space actually peaked back in April 2021. What you now have is a lot of permanent capital, a lot of big money managers that are here for 5+ years.
Welcome to Wealthion. I'm Wealthion founder Adam Taggart. Back in January, we introduced the concept of Phase 2 cryptocurrencies in an interview with Stephen McBride of RiskHedge. These newer generation cryptos differ from the conventional store of value coins like Bitcoin in that they operate much more like digital stocks. They provide an ownership claim on blockchain-based enterprises that generate real revenues and real cash flows. In today's video, we check back in with Stephen to learn how the Phase 2 ecosystem is growing, what his methodology is for identifying and purchasing these cryptos, and how regular investors should approach taking initial positions in this space. There's a lot to learn here, so let's get started. Stephen, thanks so much for coming back and joining us here again from Dublin, Ireland. I hear spring is arriving there.
Yeah, it's nice here, Adam. It's the weather is starting to pick up. The clocks went forward, so the mood is brightening up.
All right, great. As I think I mentioned to you when we first met, my wife and I spent our honeymoon in Ireland, a tremendously beautiful place. And we were there sort of later in the year. I can't imagine how beautiful it must be in April and May. So anyways, good for you. Can't wait for more sunshine to head your way. Now, let's dive back into where we left off last time. So for folks that didn't see our previous interview, Stephen, you and I talked about what you call Phase 2 cryptos, and really how they shouldn't necessarily be thought of as alternative currencies at this point in time, and not even sort of alternative stores of value. They're almost more like digital shares in digital companies. So real quick, if you could just maybe super level set for people. When you say Phase 2 crypto, what's sort of your 30-second elevator pitch for that?
Yeah, so look, as you mentioned, Adam, I think when people hear this word cryptocurrency, they think of virtual money, digital coins. But the reality is there's real businesses with real products producing real cash flow being built in this space. Phase 2 crypto, it's really a catch-all term we use for these productive crypto businesses with real world uses.
All right, great. And the last time we talked, I think I learned, I was sort of referring to this as businesses that are being done on the blockchain. I think I've learned that it's somewhat bigger than that the blockchain is a technology platform that a lot of this is happening on, but there are other distributed ledger technologies that aren't exactly blockchain. Is all that true? Can you just sort of clarify for people sort of how we should refer to this actual new emerging platform?
Yeah, so blockchain is the technology behind most crypto businesses. And then at the periphery, you have a lot of crypto businesses that aren't necessarily based on a blockchain or don't use a blockchain. So one example, which I'm sure we'll get into later, is FTX. So FTX, just like Coinbase, is a crypto exchange, a place where folks can go to buy and sell crypto. So that's not necessarily running on a blockchain, but it kind of is in the crypto space. But as a general rule, when you look at a crypto business, it runs on the Ethereum blockchain or its own blockchain.
Okay, great, thanks. And we're bringing our whole audience along with me, on this journey on understanding exactly how this new space works. So thanks for entertaining my sometimes rudimentary questions here. But I've been excited to talk to you and get you back on here because crypto sort of has gone, the crypto ecosystem has kind of gone for a wild ride since the start of this year. They had hit pretty high highs back near the end of 2021, but got pounded down as the year started here. About a month ago, I think Bitcoin hit a low of around 34,000 or whatnot. Over the past couple of weeks, it's actually hit a pretty nice rebound. I think it's above 47,000 or so today. So my question for you is for people that, whether they've gotten into the space yet or not, if they have capital that they're sort of thinking about moving into the crypto space, how do you feel about valuations today? Are there good entry points now?
Yeah, just to comment on the drop we've seen, Adam, it might shock traditional investors getting into the crypto for the first time that 50% drawdowns, 60% drawdowns in this space are completely normal. So since 2011, Bitcoin, which is the largest crypto asset, that's dropped 50% 9 separate times. So, that's, you think about it, Bitcoin gets cut in half roughly every 14 months or so. So crypto, it's extremely volatile, but that cuts both ways, right? So it's volatile to the upside too. And despite those 50% drawdowns, Bitcoin soared 1.3 million percent. Yes, 1.3 million percent since 2011. Now, on valuations, just to back up a little, as we discussed in the intro, the last, there's real businesses with real products producing real cash flows being built in this space. And a lot of folks that I talk to, they're kind of shocked when I say you can value most crypto assets just like a stock, just like any traditional business, right? You can look at its sales, its cash flows, user growth, traditional metrics like that. Now, late last year, valuations, they were at or approaching their highest levels ever. A lot of hot money, a lot of retail investors came into the space in 2021 and they bid up tokens to insane valuations. Now, the recent correction that we've seen over the past 5 months or so, it's taken a huge amount of excess out of the market, and it's really set up incredible investment opportunities for long-term investors. So, for example, a couple of the crypto businesses in our portfolio, they're trading at 52-week low PE or price to earnings or price to sales ratios. And I mean, just to give you some context on this, Adam, we were looking at a crypto business the other day. It grew revenues 2,000% year over year. It's profitable and it's trading at 12 times earnings, right? We're talking about Ben Graham's cigar butt valuations here, just opportunities that you won't find in traditional markets. So, this recent decline of valuations, it's making us more comfortable putting a lot more money to work quicker than we were 4 or 5 months ago.
All right, that's fascinating to hear. You blew my mind a couple of times there. One, because you were actually using valuation terms, standard valuation terms like price to sales and price to earnings with a cryptocurrency, which is something I don't think I've ever heard anybody do before. They've simply been sort of valuing it from a speculative, hey, it's X% off its all-time high or whatever, right? But you mentioned a couple of important things there. The 50% drawdowns that Bitcoin and a lot of the other tokens in the system seem to experience regularly. You said about every 14 months or so. That's just a reminder as we continue to go into the discussion that this space is for a minority of most people's portfolios, right? It's highly volatile. You don't want to put your retirement in here yet because it's got to be something that you can stomach waking up in the morning and seeing down 50%. It's also great to hear that you believe that you've seen a lot of the sort of excessive, hot speculative, at least retail money, largely kind of leave the system now, because obviously that's sort of what a lot of people who haven't been in have been waiting for, which is, I don't know how to value these things. And they just, seem to be getting valued on a sort of a mania type of basis. So obviously, if you remove the mania, presumably that you're a little bit closer, at least, to sort of some true fundamental value for this. We're going to get specifically into a couple companies pretty soon, and I'm going to ask you to sort of go through your process for how you value them. But I got to say, the other thing you blew my mind about is a 12 PE. I mean, you can't even find that in the stock market for most companies right now. So that's really, really fascinating. So I'm going to just sort of wrap up what you said by saying, hey, you think, you were excited about this space when we talked back in early January. I'm going to presume you're more excited about it right now, if for no other reason than just valuations are a lot more attractive than they were a couple months ago.
Yeah, absolutely, Adam. Look, I mean, if, we're still incredibly early in crypto, and, people like to often compare it to and draw parallels to something that they understand, something that they lived through, like the dot-com boom in the 90s. If we're comparing it to that, I think it's like 95, 96. There's a huge amount of runway left. If you're investing in individual tokens, as we do, the equivalent of a stock picker in this sector, it's an incredible time to put money to work. I mean, the amount of innovation, the amount of fundamental innovation within crypto is quite staggering. I mean, some of these teams are literally inventing new fields of math to, push cryptography forward. As I said, a lot of the hot money has vanished. I think the kind of new wallets, the new amount of investors coming into the space actually peaked back in April 2021. What you now have is a lot of permanent capital, a lot of big money managers that are here for 5+ years. They're coming into the space. A16Z, top venture capital firm, they raised a $4.5 billion fund a while ago. Bain Capital, the private equity giant, is getting in. Tiger Global is writing $50 million checks like there's no tomorrow. So I think it's an incredible time to invest in the space, and we're incredibly bullish right now.
All right, and those are very big, highly experienced Wall Street names that you just mentioned there, big Wall Street, big Silicon Valley investor names, which sort of shows, and correct me if I'm wrong here, but that we're moving from kind of like the pioneer, the geeks that sort of, got excited about the space early, to really kind of the smart, established investor institutional money that's now beginning to come in. I see you nodding here as I'm saying this. All right, well, I want to get onto the topics of how you go through your valuation process, and to maybe do a case study or two on some of these companies to help people really understand the type of company you're talking about, and to understand sort of how these, really what a phase 2 company looks like operationally. But before we get there, I want to ask you about the impact, if there's been any, from the recent war in the Ukraine, because I think that for many people, they've been looking at that as a potential watershed moment for just sort of the promise of crypto, right? And I know I'm not talking necessarily about these phase 2 companies that are earning revenues and cash flows, but people said, all right, well, look, you've got a country, Russia, right, that's basically trying now to prevent capital flight within its borders. And crypto is sort of supposed to be the ultimate escape hatch for capital that can't be controlled by sovereign nations. So one question for you is crypto indeed living up to that promise? Is it providing a way for people to, preserve capital and move money in and out of Russia despite the Russian government's desires otherwise? And secondly, I've heard some reports about crypto being sort of an excellent way to get funds to people in need, in Ukraine, whatnot, and it's becoming a really direct way to get people help who are, inside these war zones. Don't know if either of those two are true, but curious, since you watch this space so much, is this having any sort of, long-term substantial effect in kind of proving the general crypto model?
Yeah, I mean, I think that is the original kind of use case for crypto, the ability to, or, really Bitcoin, cryptocurrency, of which is very different than the crypto businesses that we talk about. Look, I think there's, within the Russia thing, there's two key parts to this. There's normal everyday Russians that are just trying to preserve their wealth. And then there's this narrative that's been spun up, a false narrative that's been spun up by the media, that Bitcoin or other cryptocurrencies are somehow helping Russian oligarchs evade sanctions. So one, with the normal Russians, everyday Russian citizens, I think you have seen some amount of normal Russians with a few hundred rubles worth of dollars worth of rubles buy crypto as a way to protect their wealth. I would argue that you've seen a lot more just go buy dollars and euro on the black market, and that's a way to get kind of preserve your wealth. Regarding the Russian oligarchs, which again is this false narrative, I think people kind of pushing this forward don't understand how blockchain works. Okay, so blockchain, it gives you complete anonymity. You can send and receive Bitcoin without revealing any personal details. At the same time, every Bitcoin transaction since the network launched back in 2009 is recorded on a permanent public ledger, and anybody can look at any transaction, and it's the same across almost every blockchain. So if Russian oligarchs were plowing billions of dollars into crypto, and just remember, Adam, crypto is not that big of a market. It's $2 trillion total. So if you saw billions, hundreds of billions of dollars flooding in, you would instantly see it. You'd see it on the blockchain right away. And that's why kind of, illicit activity, using blockchains for illicit activity is a terrible idea. You have blockchain analytics firms like Chain Analysis who regularly work with the US government to catch and hunt down criminals. So I'm kind of, on the sanctions, I'm confident that way more Russians have used, US dollars, cash, all those things that can't be traced to avoid sanctions. I think the more important part of this story is what's going on with Ukraine. So as you mentioned, the crypto fund of Ukraine, it's raised more than $100 million in crypto. Now, I'm not sure what that money is being used for, but the important point for me here, and a point that's relevant to all our viewers, is that crypto is showing itself to be the best capital formation tool, a way to raise funds that the world has ever seen. So if you look at the properties of crypto, right, it's global. So it allows you to transfer value instantly around the world to anyone in any country. It's also fast. So, you can move money as seamlessly as you can send an email. It's cheap, and it's permissionless, which is incredibly important. So there's no middlemen telling you, oh, you can't send money there, you can't send money there. Now, you compare that to the traditional financial system, which is completely the opposite. It's regionalized. Every country has its own banking system, and you have to switch currencies when you send money overseas. It's slow. We all know you have to wait 3 to 5 working days to for a bank wire to clear. It's expensive, $20 to $50 to send funds overseas, and there's lots of middlemen, right? So if the bankers don't like where you're sending your money, you can't do it. And just to back to this, so that's with Ukraine, but just to show the power of crypto as a capital formation tool. Some of your viewers might be aware of this thing that happened back in November called Constitution DAO. So an internet group called Constitution DAO formed, and within 5 days, they raised $47 million in Ethereum, and they used the money to bid on an original copy of the US Constitution at a Sotheby's auction. So, they ended up losing to Ken Griffin, who's the CEO of Citadel. But I think that showed just how powerful crypto is as a capital formation tool, as like a social coordination mechanism to rally around Ukraine, to buy the Constitution, to buy a rare album or a painting. So there's lots more of exciting stuff that's gonna happen in this space.
All right, great. So you nailed the spirit of my question, which is sort of, are these developments accelerating the legitimization of crypto? It sounds like, in your opinion, yes, they are. And I think you just gave some great examples there. The whole other topic for us to talk about, maybe next time you come back on, Stephen, and help people understand what a DAO is, which I believe stands for Decentralized Autonomous Organization, correct?
Correct. All right. Fascinating.
Yeah, totally fascinating. My kid's sister is involved now in some organization that's sort of helping DAOs form. I won't get into that in this interview just because we just don't have the time to do it justice. But basically, as I understand it, a DAO is just a completely new way to kind of create an entity like a company. But what it can do is almost limited to the imagination of the participants who want to form together and create one of these DAOs.
Yeah, it's incredibly exciting. You can kind of think of it like the next corporation, the next stage of the LLC. And as you said, the possibilities are endless.
All right, great. Well, look, we scheduled this video to really get deep into these phase 2 companies and specifically your approach and how you value them. So Stephen, I'm going to ask you to kind of elaborate on that for us. Real quick, I just want to remind folks that if you are unfamiliar with crypto, when I interviewed Stephen last time, he and his organization very generously put together a 40-page free report on how to invest in cryptocurrency. And it really goes on sort of a step-by-step process, all the way from just explaining what a lot of the terms that he and I are using here are, but telling you, okay, how do you actually create a wallet? How do you use an exchange? So if you're looking to kind of get onboarded and how to understand this space, that resource is extremely helpful. You can go download it right now for free at wealthion.com/crypto. All right, Stephen. So back to stage 2 cryptos. Can you, give our audience an understanding of when you guys go to look for potential companies to invest in, what does that process look like? And kind of what's your checklist when you start looking at a specific company that leads you to the point where you're going to make a decision whether to invest in it or not?
Absolutely, Adam. There's 2 main kind of categories that we, 2 ways to assess the crypto. The first is something we call protocol market fit. So, you think about a traditional venture capitalist. They go in, they assess a startup in the traditional world. The first question they're going to ask, the first thing they want to know is, what does the business do and is it valuable? And, just going back to how misunderstood crypto is, folks seem to think that fundamental business analysis does not apply here, but it absolutely does. So we spend a lot of time right out of the gate getting into the nitty-gritty of what the crypto protocol actually does. For example, is it a crypto exchange? Is it building a new type of wireless network? Is it a game that you play? Is it Amazon Web Services for crypto? And then you want to really understand, is that business valuable? Like, is it creating value for the real world? And as importantly, is it capturing value for token holders, the people that buy the token and kind of power the business? Then so kind of to help us in this analysis, you use all the traditional metrics. You look at, is it growing revenues? Is it growing users? How many users are on its platform? Its cash flows, all those type of things help guide you to whether this is a valuable business or not. And the incredible thing about blockchain-based businesses is they allow you to constantly underwrite your investment, right? So crypto is pioneering something we call real-time financial reporting. So you can see how much money a business made today, how many users were on its platform, how much profits it made today, with blockchain-based businesses. For example, you can go to a website like Token Terminal, and you can see how many billions of dollars flow through a decentralized exchange like Uniswap every single day in real time. It's like getting a daily earnings release. Now, you compare that to the stock market, where investors only get a snapshot of how a business is doing 4 times a year, right? And I mean, the information is always outdated. You get quarterly earnings at least a month after the quarter has ended. So crypto is really a whole new world when it comes to that. The second thing that we really dig into when assessing phase 2 cryptos or any crypto businesses is tokenomics. So Adam, if you said to me, Stephen, I'm only going to give you one data point, one thing to know about a crypto business before you can invest, I would absolutely choose its token economics, also called tokenomics. So you can think of each crypto project as its own little mini economy, right? And a crypto's token economics, that defines how tokens or money is distributed and earned in its economy. And I think we briefly touched on this last time, Adam, but unlike in the stock market where you kind of inherently know that buying a share in a business gives you rights to future cash flows and all these things. Crypto projects have wildly different tokenomics, and the thing you have to be aware of is good tokenomics. It can cause a mediocre project to soar, and bad tokenomics can weigh on even the best, fastest growing crypto business. And within tokenomics, there's really two things that we look at. First of all, how does the token accrue value from the underlying business? So, maybe the easiest way, without getting too into the weeds here, Adam, is to say that all revenues and earnings in crypto aren't created equal. Every crypto token, it accrues value, from the underlying business in a different way, and some don't accrue value at all. So they're just, valueless tokens that are somehow tied to the underlying business. So really, you want to look out here for tokens with a clear value or a clear link to the underlying business. So, for example, when revenue is generated by the protocol, the return to token holders through a dividend or token buyback. The second point within tokenomics is the supply schedule. So maybe you've been on CoinGecko before, Adam. It's like a website where you can check out the price of all these different cryptos. And, for anyone that's been on a website, when you click in Bitcoin or Ethereum or any other crypto, there's two measures of supply. There's circulating supply, which refers to how many tokens are currently on the market, how many tokens are outstanding today that you can buy or sell today. And then you have max supply, and that's the total number of tokens that are to be released over the coming months, years, or decades. You can think of these tokens as like they're locked. They're either held by founders, early investors, and they're scheduled to unlock over a set period of time. So understanding when these tokens unlock is critically important. And just to put some concrete kind of a framework around this, there's a gap between Bitcoin's circulating supply and its max supply. But those Bitcoin, they're to be released to miners over the next 100 years or so, right? So slowly released isn't a concern for existing Bitcoin token holders. Now, things get a lot more dicey when you have a huge amount of tokens that unlock over a weeks, months, or even 1 year. Because that basically means a big chunk of tokens could be dumped on the market. They could be early investors who have like 1 million tokens unlocked. Maybe they're up 50x on their investment, and as soon as they unlock, they're going to sell them. So that's kind of it's kind of like a company issuing millions of new shares, right? That's going to dilute the value of existing shares, and that's bad for existing shareholders. So tokenomics, critically important, and something people have to be very aware of.
All right, great explanations and super fascinating. And yes, I'm going to reiterate what I said last time we talked, Stephen. I think the way to think about the future of crypto and the blockchain is really not the way that we were sold for the past bunch of years, which is alternative currency, store of value. It's much more about the stocks of the future, right? Or the security, the financial securities of the future. And eventually maybe we'll, rather than buying stocks on an old exchange like the New York Stock Exchange, and as you said, having to wait every quarter for an earnings release to figure out what's going on with it, and having to deal with a traditional exchange like TD Ameritrade. Instead, we're going to be using these online exchanges to buy tokens in DAOs that we're getting real-time information about. It's got this whole sort of innovative new world element to it, brave new frontier. And there's certainly a number of things you listed that do sound superior to the way we're currently doing it. And that kind of real-time investor information flow is a great example of that. On tokenomics, we talked a little bit about this last time, but you did a really good job of elaborating on it here. It's sort of like saying if these are the new shares of stock in the future, not all shares are created equal. They can be very, very different. And there's precedent for that today, right? You can have preferred shares, you can have restricted shares, you can have shares that different classes of shares, some that don't have voting rights, et cetera. I think tokenomics is just sort of that on steroids. which is the company can define however it wants, what you're going to get if you hold a token. You might get nothing. You might get the maximum amount of pass-through of the earnings that the company makes, or you might get a whole bunch of other different bells and whistles that, the collective organization deems, is what they want to do. So to your point, you really got to understand the tokenomics of the company that you're investing into. You talked about this supply schedule, which is, again, that's a factor today, right? If you're looking at a company's financial statements, you want to see what its total shares outstanding are, both floating and then that have been max approved by the company, because you could get diluted if the company all of a sudden decides to release a lot of shares that have been held back. Sounds like you have to really watch out for that here in this case, and that's probably part of the Wild West element of this. You talked about shares being locked that then get released over a set period of time. And I guess my question I want to ask you here is that something that's set at the start and these companies are very transparent about? Is it all provided the way in which, a company's financial statement does give you sort of the total share count and the amount that's publicly traded? Or is there a danger here, because it's a bit more like a Wild West, that you could buy into one of these companies being told one thing, but then the company turns around the next day and massively dilutes your investment in a way you didn't expect?
Yeah, unfortunately, Adam, it is the latter. It's very opaque. You really have to do a lot of digging. It's not like, hey, here's a 10K and you know exactly where the analysis on the business is and where, it talks about shareholders. It's very opaque. You have to go to a lot of different sources to find out who owns tokens and who doesn't. So it's something that you really need to be very aware of. There's lots of cases where things were not disclosed to token holders when they invested, and then boom, suddenly they find out there's a billion tokens to unlock next year. So something people have to be very aware of. As I said, even the best project can be weighed down by bad token economics.
Okay, and what you're underscoring here too is the importance of what you and your team at RiskHedge do here, Stephen, which is, you guys are out there, you're highly experienced in making these type of investments. You know where to look to identify, these new companies as they come out. You know what to look for as you pour through the whatever available data is out there. And I'm going to imagine that most people watching this, especially those that haven't invested in crypto before, would be very wise to benefit from the guidance of an experienced professional like you guys going through this process. And of course, that's why your team exists. You have a premium newsletter that folks can follow, and basically you guys open the kimono and say, hey, we're interested in this company for these reasons. This is what we like. This is what we don't like. These are what the tokenomics are. You kind of do all the heavy lifting for them, as well as put your sort of professional, hey, we think this is a good investment, or hey, stay away from this one. At the end of this video, we can tell folks how to sign up for that. But so let's get to the point where you have looked at a company and said, okay, we think we like this, we want to invest. How do you actually do that? Because these companies are traded on different exchanges, and a lot of the ones that you like to find, if I'm remembering correctly, is you kind of like to find them when they're still so small that they're trading on these sort of minor, less well-known exchanges. One, because that's when they're early, right? And prices should be lower. But secondly, as those companies grow, they then, just like a company in the real world here, it then tries to get listed on a larger crypto exchange. And when it does, and the wider crypto investing community notices it, there's an arbitrage there. At least there was the last time we talked, where you see that token, pop usually a fair amount as new capital comes from that larger exchange into the company. So can you just sort of walk us through? Okay, I'm interested in investing in this new DAO or whatever I just found. What does that process look like?
Yeah, such a great question, Adam, and something we place great importance on. So look, just to set the stage for folks, I think you can buy roughly 150 different tokens on Coinbase today. And that might sound like a lot, but there's over 13,000 listed on CoinGecko. So, that's 1% of tokens you can buy on Coinbase. To take advantage of the best opportunities in crypto, to, invest in these early stage cryptos before they list on Coinbase and become huge. Your first step is to get a crypto wallet. So a wallet like a MetaMask, Ledger. There's a lot to talk about here about how to safely store cryptos and all those things that people have to be very aware of. But basically, that crypto wallet allows you to go to a decentralized exchange like Uniswap, which is an Ethereum-based decentralized exchange, and there you can buy many of these early stage cryptos. It can be a complex process getting involved. First of all, that's why we have special reports and all these things that walk members through how to do this step by step. You show them the best wallets to use, how to fund the wallets, what exchanges to use, and how to safely store cryptos. Just to put a final point on it, there is, it's a very fragmented space today. There's not one place where you can go to buy all your cryptos or even safely store it. And it kind of reminds me of the early days of the internet. I don't know if you remember, but when we had like 50 different search bars at the top of our internet browser, it was like there was no winner crowned. It was extremely fragmented. It was messy. But the flip side of that was that you had the chance to invest in incredibly early stage startups, Amazon, for example. And that was kind of the birth of this whole new industry, the internet. So, crypto, the user experience leaves a lot to be desired today, but that's also our opportunity.
All right. Yeah, that's a great way to look at this. If you're, onboarding here and kind of frustrated by the friction that's still in the system, is that sort of the price you're paying for the inefficiency of, the first inning or two here. And of course, as you said, that's where you have the potential to buy some of the long-term winners that emerge over time, right? And part of the price of that is you got to deal with some clunky user experiences, and there are going to be some dogs in there that die out. But hopefully, those big long-term winners more than make up for all of that. All right. Well, look. So two things. So, folks, he just mentioned a lot of sort of the step-by-step steps that you're going to need to take. And of course, there's a lot of detail into kind of determining which wallet's best for you and how to set up these exchanges. All of that is contained in that free 40-page guide that I talked about. And of course, the picks and whatnot of specific companies that Stephen and his team have identified. By downloading that report, that's the best way to get your name on their mailing list, where they can start telling you what reports they offer, and you can determine which ones might be of greatest interest to you. And again, all of that is at wealthion.com/crypto. You can imagine I'm probably going to repeat that URL a few more times here for folks. But Stephen, let's make this really concrete for people. So let's talk about a couple phase 2 companies that you've either bought into in the past or that you're buying into now. And if you can just tell us exactly what those companies do. So we're taking it sort of from the theoretical to, all right, these are actual attractive phase 2 companies in your eyes.
Yeah, absolutely. Let's talk about Helium first. I think we briefly touched on Helium last time we talked at him. So
we did.
Helium, it remains the single best example of a crypto business disrupting the real world today. So just to give folks context, Helium, it's building a brand new type of wireless network. It's one that's not operated or controlled by a big corporation like AT&T or Verizon, but owned and operated by individuals, by folks like me and you. So the network, instead of running on, hundreds of giant cell towers dotted around the countries, it runs on hundreds of thousands of hotspots. Think Wi-Fi routers dotted around the globe. So I have two, and I have one Helium hotspot right here. So anyone can go out and buy one of these hotspots. And the best part, Adam, is that you earn Helium tokens when you get it up and running. When we started to look at Helium, I think there was less than 40,000 hotspots around the world, most of them in the US. Today, there's over 685,000 hotspots live in 168 countries. And I think that's up 70,000 hotspots in just the past 30 days. So it's the fastest growing wireless network in history. And it's remarkable the scale that they've reached while still being a startup. So just to get into, that's what Helium does. And what does the business look like under the hood? So Helium did around $15 million in revenue this quarter, so over the past 3 months. And that's up 2,800% year over year. And just, folks might be asking, where does the revenue come from? So folks like Nestle and Volvo, they pay to tap into Helium's network for various use cases. So it kind of has, back to our 2-point checklist, has clear protocol market fit. It is one of the best uses of blockchain technology so far. And, digging into the all important tokenomics, solid tokenomics. So Helium uses a pretty common system called a burn and mint system. And it basically allows HNT token holders to profit from the rapid growth that we just discussed. So basically, when a company like Nestle or Volvo wants to tap into Helium's network, they have to acquire HNT tokens. And then when they are used on the network, when they use those, you think of them as prepaid data credits, those HNT tokens are then permanently destroyed or burned. So in other words, when companies use Helium, they're also reducing the amount of HNT in circulation. This is kind of, to bring it back to the concrete world of stocks, it's like companies buying back their shares in traditional markets. So, which, as you know, Adam, it reduces the number of shares held by the public and increases the value of the remaining shares. So Helium remains one of our highest conviction investments today. The other that I'd like to highlight for folks, and we briefly talked about it earlier, is FTX. So just like Coinbase, FTX is a website where you can buy, sell, and speculate on cryptos. And its growth has been nothing short of phenomenal. So last year, FTX had handled around $4.5 trillion worth of trades, which was 1,000% higher than 2019 and 2020 combined, which is just staggering. The fastest growing crypto exchange in the world. And it's on track to do $1 billion revenue this year. So not small by any stretch of the imagination. What excites us most about FTX is that the opportunity for them is really only getting started. Their largest, most lucrative market they haven't even tapped into. So today, Asian traders, they account for most of the volume on FTX. And it barely operates in the US. And, basically its most popular products, so derivatives like futures and options, in the US, they fall into a regulatory gray area. Basically, the CFTC ruled crypto derivatives, they have to be regulated, but they haven't issued adequate regulations to kind of cover them. So it's in this weird spot. But so that's why FTX does not allow American citizens or US residents to trade on its main exchange, FTX.com. And what's exciting is we expect this to change in the coming months. So recently, FTX acquired LedgerX, which is one of the only licensed crypto derivatives firms in the US. And earlier this month, we got news that FTX is actively working with the CFTC to launch kind of its first derivative product. So it won't be the whole suite yet, but it's taking a very methodical approach, making sure everything is regulated and they don't have to backstep. And also, people might be familiar with the name FTX, and that's quite because it's kind of launched an all-out marketing offensive in the US. So partnered with Tom Brady, folks might have seen that great Larry David ad from the Super Bowl. It also brought the naming rights to NBA's Miami Heat Stadium. And, it might surprise folks that FTX and FTX US now valued at $40 billion, which is actually more valuable than Coinbase. And, there's just kind of one problem for ordinary investors. FTX is still a private company, right? So ordinary stock market investors, they cannot buy FTX stock. But there's a backdoor way to invest in FTX, which is the FTT token. So, FTT token holders like us, they benefit directly from FTX's rapid growth through its buy and burn mechanism, similar to Helium. So every Tuesday, FTX takes 33% of its revenue that it earned over the past week, and it uses that revenue to buy FTT tokens on the open market, and then it permanently destroys or burns them again. This is like a stock buyback, and investors love stock buybacks.
Wow. Fascinating. Both of those are they're just so fascinating. So with FTX, just so I'm clear, it's not operating in the US, at least not at scale yet. You mentioned the acquisition that it's going through there and that it's working with the CFTC. But this FTT token, can US investors own that token?
Yeah, so, it's not so just to be very careful here, Adam, FTT is not marketed to US residents. In other words, if you try to go to a centralized exchange like Gemini or Coinbase, you cannot buy FTT as a US resident. However, you can buy FTT through a decentralized exchange like Uniswap or SushiSwap, and we've kind of seek the legal advice on this, and it's not something that is illegal. It's just FTX being very careful not to get on the bad side of regulators, and that's something you'll notice about the company. They are extremely methodical. Its CEO Sam Bankman-Fried said he spends 5 hours a day talking to regulators. Extremely methodical. They are going about everything the right way, above board. So this is a company to keep an eye on.
Okay, great. Yeah, and this, I think, is an example of, you were saying earlier, where these are early days, Wild West. There's just lots of things happening and things in parallel, and you need to. There's a lot of opportunity, but you kind of need to learn to navigate your way through this. And again, you're sort of underscoring the value that a firm like yours presents to inexperienced or maybe even moderately experienced investors in this space, where you're hacking through that jungle, you're finding all the cheat codes, you're finding the path through the maze, where people can invest in the opportunity before the big watershed moments hit. Like with FTX, if and when they do get US approval to have the exchange be available to US residents, it's a big market that should obviously be reflected in a big bump in the price. All right, super fascinating, and thank you. I think you just helped really made this understandable in the minds of a lot of folks, of like, okay, yeah, those company business models make a lot of sense to me, right? And we talked a bit about Helium last time, so I won't rehash a bunch of my comments, but I do love that they're, again, as I understand it, how you've explained it, you can invest in Helium as a token holder, and buy tokens and get your share of the value that the company is creating. But then you can buy one of those wireless routers like you showed us, which I just sort of think is like a mini mining rig, right? You pay a couple $100, set it up in your house or whatever, and that thing is making more tokens for you as the network uses it, right? So a lot of people hear about cryptocurrency miners. That's kind of become a big arms race now, where there's companies with massive amounts of budgets that are building these data warehouses. People are co-locating next to, like, where they were flaring gas off in the Permian Basin. They're using that excess gas now to power these massive data centers. It's not something the individual can do anymore. 6-7 years ago, yeah, a guy with a computer could rig it up and mint some Bitcoins on his own. Now that game's become a lot harder. But things like Helium kind of let the average person get back into that game a bit, right? I see you nodding as I'm saying this.
Yeah, look, one thing that we've emphasized, and I'd love to talk to you at a future day about, is it really pays to use crypto. So, just to to put a little point on this. Tushar Jain, which is one of the principals of Multicoin Capital, one of the best firms in the industry, one of the best investment firms in the industry, said I think they bought 30 or 40 helium rulers back in the day, and they said it was one of their highest IRR investments to date. Now that's saying something for a firm that's made 1,000 times their money on Solana and all these things. So it really pays to use crypto. And as you said, Adam, mining is a bit out of the reach for most folks these days, but there is plenty of other opportunities to earn tokens through crypto.
All right, I'd actually love to make that a topic of one of the times to have you back on again in the future, is to talk about, okay, in addition to just buying these tokens, what are ways in which people can actually earn them going forward? All right, Stephen, well, I'm going to try to wrap things up here. Reminder for folks, if this is of interest to you and you would like to learn more about this space and maybe even begin to put your toe in the market, go download that free report at wealthion.com/crypto. I'll also put the link in the description below this video. And then again, enter your name there into the email field, and Stephen's organization will send you all the different types of services that they can offer. Because like I said, they offer a number of them, from holding your hand and helping you do the first couple of steps of just getting set up, all the way to saying, hey, look, we really like these specific tokens right now. We think they should be bought on this exchange at this time. All right, Stephen, with that said, I'll let you have the last word here. I guess any parting bits of advice for folks here, and maybe in that answer, if you could share sort of what excites you the most and maybe concerns you the most about the current state of this space.
Yeah, I mean, maybe to take the last question first. I think what excites me most is the amount of talent and big money capital moving into the space. So, Brevin Howard, one of Wall Street's most successful hedge funds, launched its first dedicated crypto fund. The UK's largest investment firm, Man Group, it also has launched its first dedicated crypto fund. I think maybe even more important is the amount of smart people quitting their cushy Silicon Valley jobs to jump into crypto. I mean, in just the past few weeks or so, YouTube's head of gaming quit to become the CEO of Polygon, which is an Ethereum-like blockchain. You had Facebook, one of Facebook's longest-serving employees, David Marcus, leave to set up his own crypto fund, and the CEO of the London Metal Exchange, which is like the global center of commodities trading, he quit his role to join a crypto startup. And just back to how misunderstood this sector remains. These people are not risking their reputations and billions of dollars to dabble in like some speculative mania, right? They clearly see that crypto is a transformational trend that comes along only once every few decades and mints a whole new class of billionaires, just like the internet did, just like banking did, just like the oil barons did in the back in the day. And I think just to comment on the current environment, Adam, I get asked all the time, Stephen, how are you navigating what's going on right now? We have war, record inflation, the Fed raising rates, and my answer is that I don't try to navigate it. The bet that I'm making and my firm is making is that crypto is the most important technology since the internet, yet it's still wildly misunderstood, and not just by novices, but by financially savvy investors. Maybe just to close up, Adam, we've talked a lot about a lot of different things, and people might need to rewatch the interview to get everything. I think it's helpful just to bring it back to the choice, the portfolio allocation choice facing viewers today. So inflation are 40-year highs, so you can't sit in cash. Bonds are bleeding money. I think they're one of the worst years for bonds in recent memory. So, but stocks, indices at least, have held up reasonably well. Real estate's been an exceptional investment. Commodities are having their best year in over a decade. But that, leaves a big chunk of your portfolio that's not working now, right? You think about the traditional 60-40 portfolio, it's a hell of a lot of money in bonds, and it's not like you can just move the cash. So what do you do with that money? I think it makes sense, just to go back to the very first thing we mentioned, it makes sense to allocate a small percentage of your portfolio to crypto, which, as I said, has been the best performing asset class, bar none, over the past few years. And just to hone in on that, you don't have to go all in on crypto, right? I just tell people that your allocation just can't be zero. 1 or 2% is more than enough given the outsized returns that crypto can offer. So I think that's what I want folks to take away from this conversation.
All right, well, very well said. And we have a lot of people who watch these videos who are fans of the precious metals, own the precious metals. We talk about them a lot on this program. And, there are a lot of reasons why, people may own precious metals that also apply to cryptocurrencies. And even though we're talking more on sort of like the stock version versus the store value, argument and whatnot, you're making a really good argument that just like we make with precious metals is look, whatever ultimate percentage of your portfolio you put in it, it's up to you. We just don't think it should be zero, right? And when you're talking here about kind of the future of investing, whether you've fully bought into the whole story yet of what you and I have spent this hour talking about, I think and hope that we've done a good enough job here in this past hour to let people know that there's enough credible reasons to explore this space that somebody shouldn't be 100% dismissive of it, right? So even if you haven't fully gotten it yet, maybe you want to just dip a toe in the water with, a percent, even less, but just kind of get in the door. And especially in this space, and I'll let you close on this, but it's because it has got some friction in getting started. If you decide at some point that you actually do want to allocate capital in this space in a material way, it's much easier to do that if you've already kind of got your wallet, determined what exchanges you're going to be using and whatnot, and gotten a little bit of familiarity with it, than trying to scramble from not knowing anything and having zero set up. Is that true?
Yeah, absolutely. Look, I mean, there is kind of a lot of, you do have to take steps to get set up, but really, as you said, Adam, just dip your toe in the water, get set up, so then you can have a little think about it and allocate when you feel the time is right.
All right, great. Well, we'll leave it at that, Stephen. I look forward to having you back in another month or two. Folks have really enjoyed the first one that we did. I assume a lot of folks are going to enjoy this too. So let's continue our agreement to make this a regularly recurring segment here. One last reminder to folks to go get that free report if you haven't already at wealthion.com/crypto. In closing here, if you've enjoyed this conversation, please let us know in the comment section below, but please support this channel by hitting the like button and clicking the subscribe button below. Stephen, thank you so much for giving us so much of your time today. Wonderful discussion as always. Look forward to having you back on soon. Everybody else, thanks so much for watching.